Hello and welcome to Crux Investor. We caught up earlier today with John Borshoff, CEO and MD of DYL. Now, this guy is the grandfather of uranium. I don't think he'd mind me saying that. If you are invested in any uranium juniors, you need to watch this video. We talk about the market, how some companies are playing it, how some companies will succeed and how many won't. We also look at the recent appointments that they've made to their board and how they hope that advances their own agenda. Plus we talk M&A, of course. Lots of other topics discussed. And if you're a uranium investor, definitely watch this. If you want our thoughts and opinions on the conversation, John, the topics discussed, and his company, you can find that at cruxinvestor.com/club, where you can also find detailed company reports and analysis. We've got commentary from experts from around the world on a variety of companies and commodities, including our weekly uranium show, which is always an eye-opener. We've got training courses on there, and we do summaries of all the interviews that we do just to save you some time, because we know you're busy people. But more excitingly, I think, is there's a wonderful, thriving community of investors sharing their thoughts and ideas with each other in a nice, safe and friendly environment, free from all that judgment, trolling and abuse you may get elsewhere. So go and join them, cruxinvestor.com/club. There's a little bit of a waiting list because it's been slightly inundated recently, but well worth the wait when you get there. So cruxinvestor.com/club. And we'd love your feedback too. So give us a like, leave your comments below. And if you want to see precisely what we talked about with John today, do take a look in the description below. John, how are you doing, sir?
Very well, thank you. Good to be back.
Well, I'm glad to have you back. Because the sector seems to be going a little bit crazy. I'd like some explanations as to what is going on, because I've heard different versions.
Yes.
How are you, first of all? Are you well?
Very well. Yes, we've, as I say, we've got a clear sort of path to the horizon and beyond, and so working everything to those goals keeps you fresh and enable you to measure against your own internal milestones, which I think are really important. We've got to get to in this really quite strange sector that we're working in.
We are in a strange sector at the moment, but we're going to talk all about it in a second. But first, for people new to this space, maybe to tell people a little bit about you, and maybe a 1-minute summary on the business, and then I'll pick it up from there with some questions, if I may.
So I'm, as you know, a geologist. I've been in the uranium business for 40 years nearly, extremely successful with a contrarian play with Paladin Energy, which I founded, and it went to sort of extraordinary sort of position based on, yes, contrarian, yes, an understanding of the sort of the sector, and taking a punt that nuclear had to come in and the Chinese came in, and there was the story. Thereafter, when I left Paladin, I then had a 6-month holiday and thought there's another even more astounding sort of supply situation emerging, which was not the demand side, but as I mentioned before, the supply, and with a need, I believe, for more sort of nuclear contribution to electricity. Got involved with DYL 4 or 5 years ago, a little $6 million company, and we saw potential in Namibia and also sector consolidation. Raised money through my old friend Rick Rule and the inertial parts, and we proceeded, hugely successful in Namibia. We've now got a project in a definitive feasibility stage, and also been really getting the company, building it, and preparing it for what will be a builder's paradise for uranium mines in the next 2-3 years. That's what we're at.
Fantastic. Okay. Now we've spoken a few times, and you've always been, keen to say, look, you can't build businesses on hype. You can't build businesses on promote. You've got to look at the fundamentals, okay? And we've had conversations about the timing of the recovery of the sector and what needs, what's right with it, what's wrong with it, okay? And you've got the timing right so far. That's good. But one of the things that you said to me was the skills required to build a uranium company, not promote, to build a uranium company are waning. The people are leaving the sector. It's been a while. You've done some recruiting recently. Tell us about it.
Yes. So that's really important. As our company evolves, it starts encroaching onto new sort of situations we need to deal with. I'm virtually bringing back the old team. I've got Andrew Mirko, who's now head of business development. He was treasurer. He did all the finance, project financing, bank financing for two of the Langer Heinrich and Kayla Kera. So essentially a multi-skilled guy, but very, very good in the sort of M&A side. We've got our targets. He'll be focusing on that. So that then is the sort of other cornerstone of our growth that we need to address in the inorganic side. The organic's going very well, thank you, and that we've got all of the people. On top of that, our board needs refreshing. It was obvious that as you can't have a board that's been just basically sustaining a company and not really got credibility globally, credentialed, and looking for an appropriate chairman. And it was just absolutely a manna from heaven getting Chris Salisbury, an ex, worked on the head of your Australia Rio Uranium and ERA range, then in Rossing, understands, very relevant, also technically, corporately, and those things. So that opportunity arose. He of all of the opportunities he has to come in, he's chosen Deep Yellow as the one that he's a pro-uranium naturally, but the vehicle that he thinks has got the best chance of doing things. So that part.
Let me ask you about him if I can, John, because I think, it's important that the guys you bring in actually add value. They're not just names. So you said he's chosen Deep Yellow. Does that mean he's 100% focused on your business? And if so, what have you tasked him with doing that you can't do or you couldn't do before?
So basically, a chairman and an MD work in a really strange, but I think fantastic relationship where the MD is looking after the sort of day-to-day. He presents the vision, the strategy to the board. The chairman, through understanding of the industry, through understanding of what's involved, be it in an M&A or be it in a DFS, understanding how independent directors need to be nurtured, brought around wherever. So he looks at the sort of the horizon, although in a strategic sense I am, but also getting the board to be relevant to the time in which the company exists. So a board has to evolve exactly as management has to evolve. And we've now started that essential process, and not to sort of stagnate a board, which is capabilities may be argued to be not what they should be when you're going into a complex production future.
But what does that mean? Okay, that seems quite generic to me. And if I listen to some of these other juniors, they'll say the same thing. They'll say exactly the same thing. So what does it actually mean for you in terms of growth, value creation, advancing the company? What's he going to do?
Well, I think that what he will do is that I can open lots of doors. He can open lots of doors. He can talk, government levels and support. There's always conversations that an MD talks to governments that are a bit different than what the chairman can talk. All supportive, all sort of additive, and that is not a sort of comfortable thing where you just roll out a chairman every board meeting or at a crisis time. Or at a takeover, and that's the only time. And I think a chairman has a real role. Particularly, I've known the guy since 2004. We work together, collegiate, but still have our difference of opinion. That sort of interaction creates a better result. And I'm really excited what his contribution will be. And he understands the role he needs to play as chairman and the role I need to play as an MD to get our company into the next sort of level.
Batman and Robin.
Yeah, Batman and Robin. I've said before.
Kapow! Right. well, let me talk about some of these other companies who are going into the market with a different set of skills. Because I think I know we're going to talk about the DFS and some upgrading on the draw results, which is all kind of good stuff. But the people make the business. The people grow the business, create value. So like I said, I'm hearing these sorts of noises from other companies, but it seems to me there's a whole bunch of theory. It's kind of like we've got the recipe book. We know what we're meant to be doing. We haven't done it before. We've never made this recipe before, but we've got the recipe book. Sure. So surely it's quite easy to actually do those things, isn't it?
Well, it's an interesting observation you make, because there's been so few companies of the small cap, mid caps that have made it to production in the last 70 years. And in fact, there has only been, outside of the US, 3 companies. Denison, back in the 50s, I've mentioned it before, a company in the Northern Territory, Queensland Mines, and Paladin. So when you look at that, even over time, you're competing against the big timbers, the big government associated companies, the big multinationals like what was CRA or Rio, and many others. And so in there, you've got to really be smart, clever, knowledgeable, and to have the respect of those groups as well in terms of getting there. So the failure rate of companies, and not only failure, but some of them don't even try. They sort of dress up, do it, and then put it into another company buys it. And the US sector has been a little bit more entrepreneurial in that side. It has a history of this sort of, but the US is now in the small mines brigade, and they're not there that they'll be substantially affecting the supply of the future. So now you put on top of that this sort of diminution or this erosion of expertise, and the whole a mining operation and a business, because it is that business that is in its complete form, not just producing uranium but selling it and getting it into a market, and then the shareholders to be kept. So the expertise is a real team play, that everybody is important, that everybody knows what they've done, they've been there before, and getting that coherency into your company experience, where there can be confidence that yes, we will deliver. And now with this ESG that's coming, that everybody is so sort of fascinated by. Well, uranium business and nuclear have always worked with an ESG component, because they've had to do this before their time to satisfy concerns, fears, whatever you may have. So there haven't been any juniors that have, I'd say any juniors that have produced. Teams are is the Paladin one, which one I have with me, the core part of that. So if there are going to be difficulties. Yes, doesn't mean some won't make it, but it's not going to be that everybody is there with, as I say, leading a fairly sedentary role over the last 10 years, patching up, fine-tuning a DFS with a deposit that was discovered 15 years ago or whatever. It's a different condition now than to say, hell, sleeves up, and I've now got to bloody well get to the issue of, yes, getting a technical model that we believe in, convincing banks that to fund that, and then to get utilities to believe and put out a contract 3 to 4 years up front, and that they're confident that they'll be delivered. So that's the complexities of this business, where you're on sort of contract obligations, where if you fail, there's no other source of uranium that can take the place of that, and that's why you got to rely on your own sort of abilities and merits to have confidence that you say you're going to deliver this and you'll do it.
See, it's a really interesting conversation. So that's the optics of a mine builder, a company builder. optics through an investor, and I'm going to have to admit, I think I'm going to say I'm wrong. I was partially wrong about this. All boats will float on a high tide, which it kind of went against everything that we believe in terms of investing, because that's playing the game of promote. That's a momentum market thing, whereas we've always been fundamental investors, believing, I want the company to actually get into production. Little things like so, a little bit like you. So I've been wrong, because if I look at the equities market, a lot of the uranium juniors have seen fantastic movement over the past 3-4 months, and they've been taking the opportunity to raise capital, which should surely advances the likelihood of them getting into production, doesn't it?
Yeah, but it's the same people with more money with the same project. You got what I mean? Where's the wealth going to be created there, apart from the uranium train and the uranium price coming up and doing something? But to increasing wealth, the footprint of a company is really, really important. And so, yes. And look, I think to a degree that everything is on a rising tide, that people will go up. But I just take the example that if you do it right, if you have a company that develops on all aspects of what it needs to deliver in terms of project pipeline, in terms of a project that can happen, what happens is, instead of having a 1,000 to 2,000% increase, you got then a 100,000% increase, which is what Paladin did. So the more you get these things and you say what is needed at the time that high price is there beyond your project that you're going to mine and deliver on, those things become immeasurably invaluable in terms of creating and differentiating the sort of wealth creating potential of a company. And that's, I think, the sort of single trick pony, and the only big single trick pony around is NextGen, because they can sit on this. This is not a pony. This is a goddamn big bloody ox. And they can be there for 50 years. But all the others are just, and it's an interesting thing. Somebody said to me, it was on a conference, said, look, the life of a reactor is about 60 to, let's say, 80 years in future. This reactor will consume in its time 8 to 10 ore bodies, in the sense of there's one ore body that, and it's not going to consume it all because there'll be others. But what I'm trying to get to is that it's going to, a mine might be 7 years, it goes. It might be 10 years, it goes. Another one might come in. But it's gone. There's this replacive need for fuel for everybody. And that's the whole context of why project pipelines are important, why utilities regard these important, because they are looking at, say, oh, well, if we got this group, we have a supply source, and it's only part of what their needs are for over 40 years. And that's what the Camecos, the Kazatoproms, the Rios of old used to do, and the Uranos. So you've got to try and simulate and emulate that type of a need to differentiate yourself from just a company that just produces for 5-10 years and then disappears, because where does it find the replacement one?
It's interesting. I mean, talking about using the analogy of a high tide, there's also a similar one which talks about when the tide goes out, you see who's naked. And in that sense, that for me is, when can companies get contracts? Can companies get contracts? Because they are going to need to show the utilities that, one, they can get into production. They're going to need to show financiers that they can get into production economically. And there's some sustainability to that story for both sets of parties, right? Mm-hmm. Are you looking around them, using your experience, okay? And so we should be talking a bit more about Deep Yellow, but I'm trying to understand the competitive environment for you, right? So are you listening to some of these stories, these other uranium juniors, with some degree of cynicism or disbelief? Because if we listen to what everyone's saying, there's going to be more uranium than we need.
That's right. I only do it from what I'm doing. I will never approach a utility. Well, why approach them when they don't believe there's going to be a shortage? Why humiliate yourself to a group and then to say, I'll promise you I can do this. I was going to use the word with F on the front of it, but stuff them. They, when I'm ready and we can deliver, and my perception is that there's not going to be much product coming in, that's when you can talk and say, look, boys, we've got a project. We now can talk, and for sure we'll meet up at times and say, look, this is where we're at. But I'm not going to mention contracts. I'm not going to mention that. It's only when you're hungry that you'll eat on the goddamn table. And if you're not hungry, you can bloody well put the best meal out in front of them, and they'll just push it aside, because no matter what people say, there is something broken in the supply demand sector. You can't be talking yes, this is happening and that's happening, and people are sort of wetting their pants on a 15-cent increase in the uranium price, and it's still sitting around 30. I mean, it's a useless, completely, whether it went from 24 to 30 or back 27 to 33, it's a completely useless increase. And then you get company these report, it went up 23%. It's 23% of useless numbers that are never going to incentivize anybody. And let's see what the numbers need to get back. Let's see that where they're going to go double. And even if they don't go, even before they get to double, even if they get to 45, 50, I've said it before, that's not going to satisfy anybody, because fear is there. They're going to overshoot that bloody price fighting for minimal supply. And these guys are out there, somehow they're talking more to the shareholders than the realities of their business, of saying, I'm going to utility, and I'm actually looking to secure contracts. In this environment, you've got to believe the future needs the product and work to that. Those contracts will come to you, and not as a legacy contract, but at prices that you believe should be sustainable. Cameco is trying to work that model, and saying that they're not going to go out there and just sort of, virtually kill their own future by doing things where they honestly believe that to have a sustainable supply sector, it has to go way beyond what is the comfort zone of these numbers people are saying.
So how do we move this forward, John? Because I'm looking at the market, and I'm seeing some Athabasca stories, market cap way bigger than yours. Obviously we'll put there's a couple perhaps deservedly so. They've got a lot going for them. A lot of the others not so much, because no sort of sense of permits, license, technology, timing, cost, all of those wonderful things that you probably need for one of those, what are they called, commercial businesses. So the rules don't seem to apply in uranium anymore, because there's a lot of FOMO, there's a lot of belief in where this is going, and as you say, there's a lot of belief in all of these companies' ability to actually start producing pounds economically. So how should we investors play this game? What should we be looking at?
Well, I think that there are some aberrations that have happened over the last 3 months, which took people by storm. And this is companies that are buying uranium product, small ones.
Yeah.
And if you're confident you're going to produce, and if you're confident that everything you raise should be to the focus of increasing the wealth of your company by some transaction or something, then to buy a product. And I'll tell you, if they go for bank financing, that product will be tied up in mortgages like you don't believe, because it's not going to be released, because they'll have it there as security, like they've got the mine as security. It's not as simple as, having it there and then I'll dribble it out and you dribble it out so people think, oh, they're selling the inventory so they can't bloody well produce. The only people that it's legitimate for collecting uranium are the yellow cakes and the UPCs. Legitimate, ETFs or whatever you call them, and they are there doing their business as a business. But spending part-time money on a speculative, in a speculative area where it's all about creating wealth, I think it's sort of people, it's more finance people must be running some of these companies that oh no, we'll buy that and we'll be safe, and if we don't produce enough uranium, we can then sell that. Well, that means if they can't do that, they're failing on their project in production. You can't have it both ways. So I don't understand this sort of move, this sort of flurry of let's get £1 million or 300,000 pounds. Talk to me about the weaponising of UPC by the Sprott Group. That's a different story. Or Yellowcake with its fabulous deal with how it got with the Kazatomprom. That's a fabulous story. But they're on a completely different dimension in terms of as juniors. We've got other priorities, and people are investing in us to put value in a different sort of way.
So let's talk about that, because I think it's really interesting. Some of the companies that have done it, we looked at Denison and Boss, and I think UEC as well. You're saying, don't get distracted, focus on the business of producing uranium. That is a short-term win in the market or a distraction in the market. Right, that's your approach. Stick with the basics.
Yes, because that's the business we're in. The business we're in is to develop mines and sell uranium. And there are other ways of, sort of overcoming any temporary shortfalls than investing all this money that'll be sitting there for 10 years with some of these companies, not used. And I just, anyway, that's how they see it, and that's well and good. I could be absolutely wrong, and but I think that if you're investing in me or somebody's investing in me, they're investing for us to position ourselves, differentiate ourselves, and in the end produce uranium at whatever we've declared. And and have enough projects behind us to keep that sustainable, and also to grow that if demand demands it, and have the ability to put multiple operations going. And I think that's the core of it. Did you ever hear of Rio buying uranium apart from inventory that they developed from their own production? No. And Cameco, I mean, they built their inventory from their own production. They're only doing now buying because it's not to be compared to those small companies buying uranium. They're doing it because they're servicing sort of contracts, and there's a differential and a coupon rate. There's a sort of a value add that they clip the coupon on the way through. Different, should have been, I think, a bit better thought out, and Sprott and UPC can do what they like, and they are doing what needs to be done. But that doesn't mean I have to emulate them, as they don't have to emulate me to produce uranium.
Yeah.
Or produce.
So, okay.
Two different areas.
They are two different revenue streams, but I think some of those companies would argue the point that say, well, this allows us to have conversations with utilities. You say you're not going to chase after utilities; they've got to come after you. But these companies they have people appointed to speak to utilities, and this allows them to have a conversation much earlier, to get in front of them and look credible, because they do have a supply there. Is there anything wrong with that?
Yeah. So basically, a typical mine will, over its years, let's say it's a 3,000 or 5,000 million pound per annum, over a 10-year, will produce 50 million pounds. And of that 50 million pounds, it will put into the market 40 million into long term. what's a piddly goddamn £500,000 or £1 million that you're going to go up there with your little bloody little purse and sort of to try and say, well, look, this is what I'm going to do, when this is the order of what long-term contracts are. So it doesn't actually give that much comfort. It's, people might argue that, well, look, in that uncertainty, I can then get long-term contracts and then sell this stuff in the early part because I'm not producing. And well, okay, it's a high risk. It's a risk diminishing of a risk averse group that hasn't done it before, and maybe they think they need it. I don't think they did. Paladin went into £8 million per annum, and it didn't buy anything to sort of do that. Just relied on, look, we're going to do it and squeeze through, do this, do that. And but we didn't even have enough money, or as these companies will find out, to have sunk 60 million into a warehouse where they need then to in working capital and other things, that money sort of locked away there, or that sort of asset. So a growing mining company needs all the money it can get. And then if it borrows off that asset, it's actually done something wrong, because then it can't supply. You can't do it for two reasons. You can't sort of borrow off the asset and then owe a debt to somebody else outside your utility. It's just a confusing lot of options that are there, I think. And but they look, on the first instance, when you look at it, gee, that's a good thing that people have done. It seems good. But when you think about it, real down there, it's hedging for gold, fine. Which bloody company buys the gold? You know what I mean? And says, oh, well, we're going to go into a gold mine now, and we'll be actually buy gold, lock it up there, freeze our bloody liquidity, and then try and develop a mine. They're two different things in my mind.
Okay, so you're going to focus. You're not doing that. You're going to focus your eyes on the prize, which is get this thing into production, and then or get this thing to a point where it can get into production, and that's when the real meaningful value is gained. Right. So let's look at that, because you mentioned earlier spot price where it is now, whether it moves 25 cents or 20 or 25%. Doesn't change the game, right? So as much as people want to talk about it or point at it as a moment in time, which is really important, it's not right now. So what is that moment when, because you've forecast out 22, 23 to me previously, you said that you called it 18 months ago. You've not been distracted by any of the kind of catalyst moments which have come and gone and nothing changed. So what's your view on the future timing? When does uranium as an investment become more relevant?
So the two things is that in developing, let's say, the definitive bankable feasibility study, at some time through the progress of that study, you start engaging with banks you've dealt with before. You start, you're not even talking about the funding. You're talking about confidence that group has in your group, because they're also not financiers. They're full of metallurgists, bloody geologists, engineers, and all those sort of things that vet you. So now you get that sort of comfort, and based on past history, as the syndicate starts forming, and you start needing to lock in that finance, which has to be based around contracts, around that long-term contracts. I would see that type of engagement for me is not determined by the staging of the DFS, becoming to maturity in the second half of next year. If the second half of next year is coincident with increasing prices, then you can start then talking to utilities. And for me, I want to wait even after the gun has run. I want that first wave that the eager beavers will come in and do all of those issues. That's not going to be enough to satisfy a market, and then that that second wave of, oh, hell moment. What the hell? How are we going to get there? And what you'll find is uranium price will be staggeringly fast. It'll move because the fear of shortage, the fear of your sort of nuclear fleet being sort of supplied, all of those things come into play. And so it's not as if you're waiting on a flat curve or a flat increase and say, oh, that price is going to be out there. It won't be out there. If it goes to 55, already triggers fear of shortage because it won't have gone from 30 to 55 without that fear. And so we will, and I think the credibility of what we've developed, how we've developed those contracts, and of course we're going to do a little bit of work in that stage talking to them without mentioning, just g'day. A meeting doesn't work until the fifth meeting that you have, and then you talk about what you really wanted to talk about. But those first couple of meetings, they're just sort of confidence, relationship type things, and I think too many people maybe are trying too hard in a situation where the market, who cares whether one utility did a long-term contract for £600,000 out there, and this is like the swallow out in the spring. This is nothing. They will happen, and Trade Tech announces it, and as if it's a big deal. And I mean, they even announced that this week the price went up to 15 cents. I wouldn't even waste ink on that, honestly. And it's got to go to places where it's only the brave that can think about that, then it will.
So tell me this, John. I like that thought. But tell me this. There's a lot of companies that you're saying don't have the fundamentals in place, don't have the skill sets in place, whether it be assets or other or thinking. What happens to those guys at that moment that you've just described? Because when the utilities start digging around and going, well, can they, when they do their diligence, can this company give me what I need? And the answer is no. What happens?
Well, the whole thing is that equity money is dumb money. You don't have to convince the that you've actually got something that you can do. It's all based on, it's all you're trying, you're truthful as much as you can, but it is dumb money. And I'm not trying to ridicule those, through placements and all of that. What isn't dumb money is you get a goddamn bank, 3 or 4 of them syndicated with absolutely people that are pains in the ass, just going through you like a shower of whatever. And from that, their due diligence, and if they say, I'm going to loan you 200 million or 100 million, and even PE companies don't go through that diligence. That's another sort of easy sort of money, because the smell of the fee of these groups, they'll do the due diligence and tick 40 spots out there. Yeah, let's go. So some of these projects will go out there untested, and they'll go on the euphoria of the product, of the price of uranium and this. And so those projects have a great chance of failing. So project failure will be it's got to be part of your business model. That as in my period when I started with Paladin, there were 3 or 4 project failures. Well, that's norm. That's the part, because nobody had built anything since Chernobyl and in now. So that you really need that oh hell moment will happen over a little bit of time, because some of them will be living on the promise of delivery. So that's all right, because they don't need it until that time. Then, of course, that doesn't happen. And for some it will, for some it won't. And so then it exacerbates what the feeling is. So price then is not just price of uranium, but it's also who is more valuable as a supplier. That's why Cameco is a sort of a first go-to supply, as is Kazatomprom and all of those, because it's the same uranium they're all selling. But £1 is there to say, I can bet my grandmother that it'll get there. And that is the surety that a utility needs to fuel that much down the line. This is a hugely important side. This is not mucking around, whether, you're a bit short of copper and, oh hell, This is bloody cities and electricity and all of those things that need to be serviced. So I think those moments of realisation will come at 2 or 3 different levels. The real shortage, or the shortage, acknowledging of that shortage, all of the people that are putting their hands up that I'm a hopeful producer, that'll seem like it's now the problem is solved, and all of the issues that will come out of that for an industry that's been sedentary for a decade, trying to now run a 10-second 100-metre race and get there without collapsing. So all of those areas need to, and that's why a lot of financiers, they all look, and analysts, and they don't take the human factor into it. They don't take all of those factors and say, hell, beyond that deposit having £100 million in the ground, it's not just that equation, but many others that need to be included in factoring success and where you're going.
To me, that's kind of fascinating point, okay, about you liken it to a race. The question is, we know some people are going to collapse on the way to the finish line. It's a question of how close to the finishing line they get, right?
Yeah.
I think that's true. And I think that, and we've been talking about this as a thematic for our investment group, certainly with our, the private investment club, which is, last year we saw some tremendous gains for a lot of companies in various commodities, which is great. And this year's seen some tremendous gains for uranium equities too. And I think some people will, be able to get closer and closer to that finish line. But ultimately, they're going to fall over, I think. Is it easy for you, people like you, because you know what you're looking for, is it easy for you to point, and I don't want you to point at them today, I just want to say, is it easy for you to look at companies and go, that has not got a snowball's chance in hell of getting into production? I
can turn that around a bit. Is I can approach some of these companies and say, look, your assets are good. It needs this and that and retweaking. Join it up with us, and that has value, accretive value to us, a more assured value to your shareholders, and it's got a long-term life because it fits in with something other things in the project pipeline that makes a whole package. So I think, and I have, it's not just me that's said it. Gene Clark on a Sprott conference said that 80% of projects that start, his opinion, just fail, and so there's a naturalness in some of these things, particularly as these projects get tougher. They're harder. There's a lot more sort of influences in how you go about your business, and the teams that are normally there for not doing much are absolutely not the teams or the boards that you need for doing things. It can't be the same, because those ones have already left, and said, "Oh, look, I'm going to go another life."
But this is what I'm getting at, John. Okay, so you're introducing your M&A thematic. We've been talking about it for 18 months together, right? Maybe 2 years together, right? And you're out there looking for projects to buy, because but they've got to be good ones. So just to flip it on its head is, there are companies that you can approach because fundamentally the asset is good, the management haven't quite got the skills necessary to kind of get that thing going or extract the value from that. But you're also going to be looking at others and going, the management team's not so good, but neither is the asset. We'll move on to the next thing, right? But you can very quickly work that out. That's what I'm asking.
Yeah, and there are. I mean, in our own internal, naturally, we've got, there's some priority ones, and there's some ones we won't look at, and they're all promoting their projects in a similar level, red hot. And now we might be wrong, and I'm not saying we're right, but there is a sort of a consideration there that already there's a ranking on those deposits and possibilities that are not just the rankings of what their own individual feasibility studies have ranked them on the cost curve. That's just, you don't take notice of that. These are theoreticals on an unproven base, based on project engineers that have themselves not built a uranium mine, and constantly the authenticity of that old one is now being revised because there's either a refresh, a refine, a redo of the same thing, and I just, somewhere up there, there's got to be that say, look, boys, we've reached the bottom here. We just can't get any more. That's it. And let's sit on our laurels if there are any, and wait.
See, you're not a fan of reinterpretation and new technology on some
I am a new technology, and in fact that's what we're sort of noted for, and how we apply it and how we know how it works. And so in that sense, probably that's one of our biggest advantages, how we view possibility and opportunity through that prism. Whereas for many, it's a sort of a theoretical outcome, and it's not something that they've actually seen happen or how it happens. So I think innovation is so bloody important, which is the mantra we had with Paladin, and we'll continue on, and already we are doing things in our Namibian operation that has innovation, to really sort of extract more value.
Well, we better finish by actually focusing on you. You've shared your great knowledge and views and thoughts on how to play the market and how you're going to play the market. I noticed some upgrade drilling on your DFS.
Yes.
Obviously,
yes.
I don't think that's quite as important as the hires that you've made, but it's still good news. So do you want to give us the headlines there?
So basically, just to recap, our PFS, as I mentioned even on our last interview, was that it clearly stated that an operation was viable, and of the amount that we tested, which was only half, it gave us an 11-year mine life. And we know how the conversion rates were from inferred to indicated to probable. So the upgrade drilling is to get us to the 20-year mine life and plus, and by converting the balance of the inferred, and the initial results we indicated are showing us a conversion rate that is as we predicted. And in fact, I think when we eventually come out with with all of the drilling, we will have a net positive above what we even predicted. Now, who knows, but there's some good things happening there. So that we will have an indicated resource that will go straight into the mining model of the DFS and say, look, we've got 20-odd years, excluding the exploration potential that we see beyond that, which is to 30 years, who knows? And that's the 50 kilometres we've yet to drill. We've drilled it, but to really confirm. So we're in a good space in that. We've got a great team, both not only in the technical side, both geology and engineering and processing, but also in the environmental side with our sort of EIA and getting all of those things together so that we come through and we got a granted mining lease at the appropriate time toward the end of next year. So yes, that's going, and we've got some other interesting work. With the Japanese joint venture, they've now approved the swell, and we're contributing to another phase of work, and that drilling will start in the next month or so.
And you've got the money to do it. So I think just when we spoke last, end of February, you just raised 40.8 million bucks.
Yeah,
You've also raised another 2 million through an SPP, share purchase.
And just completed that. Yes.
Why did you do that? It's only 2 million. Didn't need it.
Yeah, look, I know, and it's a historic thing that I got accused a lot of times that when Paladin took off, it ignored the shareholder base and went into placements all the time, blah, blah. And so I thought, this time, every time we'll do an SPP and it engages. I mean, we didn't do enough of it, and I didn't feel that it was sort of like gluttony. We take everything. You've got to have an opinion, say this is what we want to raise, and this is the whole thing. That was oversubscribed, but we declared that we would only take 2 million of that, and that was the thinking why the SPP was included into that.
And you've been buying shares on the way up, have you?
No, I haven't, but people that are very close to me have. And the other thing is we've got those options that are being exercised, and there's now about 27 million of those, and there'll be I think most of that will come in as another sort of loading onto our sort of into our treasury. They expire June 22, and if they stay above 75 cents, 78, whatever it is, for more than 30 days, they have to be compulsorily exercised. And there's a process there so people don't lose that opportunity. So in the sense that what we need the funds for, we've got enough funds to really execute on a wealth-creating position for the company, both in terms of its organic assets and its inorganic in terms of acquisition. It's up to us. We can't blame lack of funds. We can't do this, and we've declared what our strategy is, and we'll get there.
Brilliant, John. Lovely to catch up with you. And for your candid commentary as ever. So just one last question. So what should we be looking at for the rest of this year from Deep Yellow? Not so much, well, maybe and the market. What are you looking at? Deep Yellow, I would expect to see confirmation of our expectation of the Namibian project, and hopefully we can deliver a bit more than what we indicated today. We will open up new targets that are nothing to do with the Langer-Heinrich type paleo channel, looking elsewhere. That's the Japanese joint venture and some of our own work, some of those interesting targets we've got in basement, which is in Rossing type. And the other thing is that is really for us is accretive value and an acquisition. And I'm hoping that that'll happen sooner than later, and certainly within the year. Brilliant. Okay, John, stay in touch. Yep. Nice talking to you, mate. Good on you.